Most traders are trained by fear. Fear of giving back profits, fear of being wrong. We obsess over the small wins, often forgetting that 1 or 2 big wins can make our entire month. We get a massive dopamine hit when we have a realized profit, but we have massive uncertainty when we're in an unrealized gain. Traders are quick to cut winners because it feels good to be right, but being right isn't profitable when you're always selling too soon. What's going on, guys? Dom here with another video from Clover Trading. Just want to welcome you in here as we talk about maximizing our winners. Having a few good trades every single month that can add to your month, can make your month, can keep you green in a month where you really struggle in the day-to-day, and the importance of just maximizing your winners when you have good opportunities. So if you guys have been following me for a long time, I've been trading around 10 years, and my all-time favorite setup and my most profitable setup has always been the multi-day breakout. And the reason that I love it the most is because of its ability, or of my ability, to maximize gains on that pattern. Whether I was trading OTC in 2016, 17, 18, and parts of 2019, or it's been listed stocks for the last 4 or 5 years, it's been the only pattern where I can really map out a plan beforehand, understand where I want to risk, where I want to enter, what kind of average I want to get by the time the stock breaks out, and have a really good understanding of where I want to sell. The problem I've always had when it comes to other patterns that I've traded, whether it be the first red day pattern, whether it be the reversal, whether it be panic dip buy, a lot of the patterns I've traded in my past, or even, shorting China liquidations back in 2022, was that the only way to really get bigger winners was to risk more and to put on more size, just increase my 1R from wherever that was on the day to find a way to have a bigger winner. And even when I did that, especially I think about shorting, the China liquidation plays, it was not just going from 1R to 2 or 3 or 4R. It was in some cases having to risk 20, 30, 40R extra just to have those bigger winners. And although I was profitable through that stretch, it was a very bittersweet time in my career because I took some big losses and it was a very tough time as well. Breakouts for me have always been really easy to maximize because you have the added benefit of being able to see it before it happens. Most multi-day breakouts take place after 2, 3, 4, 5 days of consolidation, where even on the quickest turnaround breakouts, the 3-day breakout where you have a stock sets its high, 1 day of consolidation, and then it breaks out, you're able to watch it develop over multiple days, identify key areas of support and resistance, identify where I want to be entering, where I want to be risking off of, and have a really good understanding of what the stock can do because I just saw it run multiple days ago. I know if it can gap up the next day. I know if it runs big in the morning, big in the afternoon. What does the level 2 look like? I understand its range, its volume, what a good day looks like on it. And the same can't be said when we're looking at a lot of first red days or a lot of reversals. A lot of times on those days, it's very 50-50 on the type of price action you get. And when it comes to maximizing those opportunities and really putting yourself in a situation to make 5, 6, 7 plus to 1 are the only really way to make more money, because a lot of the times the entry and the risk level are so static where it's a very specific area I want to short or buy off of and a very specific area I want to risk off of. And because I expect the move to happen really quickly after I enter, there's not a whole lot of time to get more size, to move risk, and to feel good about it. Whereas with breakouts, because of the way that they take place and the amount of time you have to prepare for them, the amount of time you have from your first entry to your ads, to holding it overnight, to selling the next day, it really opens up the ability to build in pyramid, if you will. I've heard a lot of people talk about, but put yourself in really high risk reward situations where you might start off risking 1R, and by the end of it, you're cutting if a stock breaks down, but you're going to make 10R, which is what just happened to me on Fannie Mae over the past few weeks, where I was in the stock for a week and a half, 2 weeks. But because of how patient I was, and we'll talk about holding on to winners longer here in a second, I was able to cut for what felt like a loss when the stock finally broke down. But because I had my plan built from weeks before and had such a good entry with such good size, I was still cutting for over a 10-to-1 winner. And so breakouts for me are the only true pattern in my arsenal that I can truly maximize. It's the only pattern I have where I can actually say multiple times in my career, many, many times, I've been able to make over 10-to-1 just by risking my measly 1R, whether that's $300, $700, $2,000, and just allowing myself to have 1 or 2 of those trades every month. The last few months for me, I've really started to get my groove back and finding these bigger winners and sticking to my plan and not just letting my original position stay on and not add to it, because I feel good about being a winner. Kind of what we talked about in that intro, where it feels good to make money. It feels good to be right. And it doesn't feel good to give back gains. Once you realize that that is a crucial part of trading and that it's going to happen, it's an inevitable thing that's going to take place, and that sometimes you got to risk it to get the biscuit. It also reminds me of my early stages of my career, my first 10 months when I was unprofitable, when I finally started tracking, when I finally started doing the data, and I realized, like, if I win at around 50%, I make the same amount when I'm right as when I do when I'm wrong. I make 100 here, lose 100 here, make 200 here, lose 200 here. I'm never really going to be profitable. I'm never going to get off that hamster wheel. My winners have to be bigger. And for me, that's when I really realized that building into multi-day breakouts, zooming out, looking away from what can they do in the next 10 minutes to an hour, and what can they do over the next day, and not turning it into an entire swing approach where I want to be in it as long as possible, but how much does my edge increase by taking it to the afternoon, taking it into tomorrow? And what I realized for me was it was the massive shift in my trading that it was needed to go from a break-even trader to a consistently profitable one. So the next thing I want to talk about is just how important preparation is to each and every trade. I know everyone out there isn't necessarily a big picture, 30,000 view type of trader, primarily focused on the daily chart, looking to tag team big trend moves and ride stocks higher or follow stocks on the backside to as low as they can get, or trading those mean reversion type of plays. A lot of people are, more quick hitter, more second, minute to minute kind of scalping mentality. But if you are along the lines of that bigger picture trader looking to take advantage of big moves on daily charts, breakouts are really, really key for me, but being prepared for them is what's really been the big difference for me in going from those when a really good trade comes around making 3 or 4 to 1 or making 10, 15, 20 to 1. And I've had a couple of those trades recently. We'll outline one here on CEP, which was a stock that had, Bitcoin Treasury news, which was one of the first in that sector, but had a great response to it. And it was a stock that went from the tens all the way up towards $40 a share over the course of multiple days, showed its history of gapping up, showed that it can trade really big volume, showing us that the catalyst is legit and the response to it was good, right? But we see this all the time in small cap land, right? Where stocks go up big, they run, they squeeze out, they go further than you think, and then they come right back down to reality, right? So the multi-day breakout setup probably happens on 5 to 8% of the stocks that start to run, where we get this initial move. Most of the stocks that we're watching and that we're trading and that we're talking about, Good Morning NASDAQ, aren't going on to break those highs again and go higher. So, breakout in itself is kind of an anomaly in kind of chasing a unicorn, where I'm watching those stocks that are holding up after they've had these big moves and potentially going on another leg, whether it's due to the news sticking and the hype surrounding the stock is just too big, whether it's short sellers getting involved too soon or not taking their profits and being too patient, holding on too long and, building the stock back because the stock isn't going down like they thought. So their cover orders are making the stock go higher and higher. Then momentum buyers jump back in, and then we get a really nice short squeeze. Whether it's just a hot theme or a hot sector, and the stocks continue to make new highs like they did with the quantum stocks at the end of 2024. But preparation for these trades is the reason that I think you're able to make more on these than you are with other patterns. And it's not to say you can't be more prepared. It's a Sunday night right now, and I'm going to make my watch list here in a bit. And, if you're a first red day shorter or reversal buyer, you can most certainly identify levels that matter, identify levels of resistance. Where do the stocks struggle on the way up? Where do the stocks struggle to go lower on the way down? Areas of support, and really map out, where the best style of entry is, where the best style of exit is. How long do I want to be in the trade? How quickly can I move risk? Where can I add to my position, right? The more prepared you are in general, the more you can make.
Ever dreamed of trading like one of the Clovers? Well, it all starts with choosing the right broker. Clover Trading and Cobra have teamed up to supercharge your trading experience. By clicking below, you'll unlock the power of Cobra Prime. We're talking top-tier trading tools, saving you hundreds of dollars. Get ahead with real-time scanners, cutting-edge news, 30 days of commission-free trading, 30 days of free DAS software, 60 days free of Ask Edgar, and so much more. Imagine all that, plus superior short inventory, personalized support, and interest on your idle funds. But it doesn't stop there. Cobra offers competitive pricing on locates and commissions that fit your trading style, with the ability to trade stocks, futures, options, and other products. If you're under the pattern day trading rule, Cobra has a unique solution for you. Venom, a platform designed for traders with smaller accounts to go long or short on small and mid-cap stocks. Ready to elevate your trading game and save big? Click the link below to access exclusive deals only available through Clover Trading and Cobra.
When it comes to breakouts, I think the upside is just so much bigger because we really don't know what these stocks can do. And, that's where you see breakouts go from $2 to $8 or $5 to $20, right? And sometimes it's out of the blue and it's hard to predict. But oftentimes that first big move, the 50%, 100% from the breakout level is very predictable. And, a lot of the times the stocks will fail, but the ones that work all show similar commonalities where if you have the right plan and you're prepared for it, it only takes 1 or 2 of those out of 10 or 20 to be way, way ahead while trading the pattern. And just to kind of walk through the CEP trade here, when we talk about preparation, the areas of the trade that I really want to map out, and this is something where if I see a stock developing and setting up like I do CEP here, after 2 big days, we set the top and we spend at least 1 day where we do not break that high. That's where it becomes a multi-day breakout to me. Once we've had a significant run, the stock's got extended, we've had at least 1 day where it doesn't break the previous day's high, then it's fair game for us to buy that breakout level down the road, whether it be the next day, 2 days, 5 days. That's the level that matters to me. But it's really just mapping out the areas of interest. And I will put this down on a piece of paper. And the reason I started doing it this year, and I've had really big trades over my career on breakouts, but what I realized is it's just so easy to get in your own head. It's so easy to overthink trades once you're in them, or while they're developing, or while they're breaking out, and to think that I know more than the pattern at hand. And oftentimes what I would do is I'd have a great plan. I'd have a good entry. I'd have a good cushion going into the end of day 1 or into the breakout level. And I'd see something I don't like. I'd see a level 2 turn. I'd see big size on the level 2. I'd see a weird snap off a high day test, right? And I'd take my position off and I would forget the mathematics that go into trading. The understanding that the edge is very small here and the margin for error is very small. So if a stock runs 100% for the breakout level and I had a really good position before the breakout occurred and I sell that for peanuts, 1R, 2R, or even at a break even or a loss, and it goes on to work, that's a really, really big miss for me. And it's actually a really unprofitable miss because it could be the difference in that month between red or green. If that was the type of trade where I was going to make 10 or 15 to 1 on, it's a possibility that I don't get another one of those by the end of the month and I'm break even across the rest of my trades or slightly red. And which is why I think it's so important to have the areas of interest identified before you take the trade. And for days on this stock, I had CEP on watch. I had the key support here around $28, $29 here. I had this key lower high to the breakout level at 35 identified. And I wrote on a piece of paper, and I'm sorry, I keep bouncing around that point, where I want to enter the first time and where I want to risk. And when it comes to breakouts, I'm okay being early on my initial position as long as I'm risking the level that matters. And when it comes to multi-day breakouts, that is usually the low that is set on day 1 or day 2 after the breakout is set. And we pull back and we have to make a decision. Are we pulling into a first red day and backside is ensuing? Or are we going to pull back, set a low, and then continue to make higher lows from there, go sideways from there, have a level that's really difficult to break? The only question I'm answering when I look at that line is, at what point on the chart does the stock have to break below to where I believe it's not possible for it to break out again? And on a chart like this, I could go all the way down to the lows, but you can even see months later, we haven't even come back down there. In reality, that first line I drew has actually held pretty well even until this day. And so I want to identify the most important risk level and where that first entry can be. In this case, I bought this stock around $30 a share, $31 a share, risking that line. And then I identify where I want to add, and I put in this paper. Here is where I want to have my original position from, risking the most important level. Then I want to add this many shares at the next area, which was 35. And then I want to move risk to low of that day. So low right here. Then I want to add on the break of this breakout. Let's delete some of these lines because it gets kind of wonky really quickly. But then, I want to add at the breakout level and then move risk to an intraday support. And I'm building into this position, but I've already written this plan days before or the night before. And the key to doing that is so that way it's very robotic. It's not like I'm trying to gauge how strong it is, how weak it is. When do we have to break out? Do we have to break out right now? Or do we have to break out in the afternoon? Like, how tight of my wrist do I want it to be? There's a certain risk level for every part of the pattern. There is a new add at every stage of the pattern. And once we've turned into a full breakout, and once we've actually turned this into a breakout where it's definitely over the breakout level, where do I want to sell? Do I want to sell on the next day because the stock has a history of gapping up? Like we can see that CEP here does have a history of gapping up multiple days in a row. Do I want to sell at a specific dollar mark? We're buying a breakout over 40, right? A 25% move gets us up towards that $50 a share. It's already a huge move from its lows. That's the line I drew. And I ended up making on this trade over 5 figures, risking $700. It was like 14 to 1. But if I'd followed the step-by-step plan that's written on a piece of paper just like this, where all I did was write buy here, risk the lows. Buy 35, risk the low of that day. Add at 39, risk an intraday support level, which ended up being, I think, 35, 36. That key resistance ended up holding a support, and then selling at $50. If I'd done that, I would have made over double what I did on that trade. But because that trade was a little bit wonky in the moment, we broke out really fast in the morning. We consolidated through the middle of the day. There was a lot of emotion, a lot of, am I giving away $5, $10 a share of profit? Am I being greedy, right? Am I being greedy in this moment and not realizing that I probably should have taken some profits, which is all common thoughts you're going to go through. You're a human, you're going to have emotions. But by drawing out the plan from the start and just following it blindly, I would have done double as good as I ended up doing on this trade. And if you're brand new, your plans probably aren't going to be that consistently effective. But as someone who's been trading for a while, and especially if you've studied the breakout pattern a lot, you can start to have a really good understanding of what the price action should look like on breakout days, the days preceding breakout, the day post breakout, right? Should the stock be green? Should it be gapping up? Should it be having morning spikes? These are all questions that we can answer with some level of certainty going into each step of the pattern. But so if you really want to learn how to maximize your trades, start mapping them out beforehand. Ask the if then questions, right? If this level breaks, what do I want to be doing? Do I want to be moving risk? Or do I want to be adding more shares? Do I want to be selling? Which level do I want to be selling at? And which is what we'll talk about next. But being prepared for the trade at hand, regardless of the pattern that you're trading, is going to allow you to follow it with a level of blindness that will allow you to be less emotional and just allow yourself to say a simple phrase of it either works or it doesn't, right? I'm going to lose 1R, which I already budgeted I'm going to lose before I even took the trade, or I'm going to make 5, 10, 15 to 1. And that, when it finally works for you and it happens, and you start to realize how much further ahead you get by having some bigger winners and understanding what it takes to get that far ahead, is just having a little bit extra patience, a little bit extra discipline to follow your plan. That's when it becomes a little bit easier. The last thing I really want to talk about is sticking to price targets. I know this is a touchy subject when it comes to most traders because everyone is so different, right? You have people who are building into a bigger position, but also trading around the core. You have people who stick to a price target like it's life or death, and you do not sell a penny before it or cover a share before it gets to your price target. You have people who are kind of in the middle, will sell some along the way, but hold a small piece for the bigger move. I have always found that most people, especially unprofitable beginners, fall into the camp that they sell winners too soon, and they do it on a consistent basis. And they do it to the point where it becomes their detriment, where the reason they're not profitable is not because they don't know how to identify good trades, but that they don't know how to find good entries, that they don't know how to find good risk levels. It's that they physically can't get themselves to hold to a level where it mathematically becomes profitable for them over the long run. And that's all you're really trying to do when it comes to price targets. It's not about being right. It's not about going, I want to buy a breakout over $5 on the stock, and I believe it's going to 8 and I think I'm right. I never have conviction in my price targets. All I've done is gone over my stats of my career on every pattern that I've traded, and have realized, based off the win rate of the pattern that I trade, the average winner to average loser that I have, what is a necessary price target that I need to be profitable at the level that I want to be profitable at. And as I've gotten better at trading, I obviously will get more efficient in choosing that price target because I'm going to have more experience. I'm going to have a better understanding of what to expect on the day of a breakout, or on the day of a reversal, or on the day of a first red day and the days following. I'll be able to maximize the trades at hand because of my knowledge and understanding of the pattern that I'm trading. But what I've realized is most beginners would get away a whole lot better than the struggles they go through for the first 6 months to 2 years just by following a price target blindly. Just following a plan and sticking to it is going to be so much better than doing something different on every single trade. What is the phrase we use to identify someone who makes money over the long run trading? It's consistently profitable, right? It's doing the same thing over and over and over again until you achieve the same types of results. A lot of times people want to hold on to, the idea that you can't go broke taking profits. I think that's the dumbest thing I've ever heard when it comes to trading, because if you lose at a certain rate and your winners aren't big enough, you most certainly can lose taking profits. Your winners have to be a certain level to be profitable in this game based on your win rate. But I hold for predetermined targets, and I do that most of the time. And yeah, sure, a lot of times I don't make all the way to my price target, but there's a lot of situations where even holding through to a price target that I deem too greedy, like in this case on Fannie Mae, where I had a really nice starter position in the 680s here. We got that good news. Trump was tweeting about it. It gapped up big. I had a really greedy price target of $15 a share, and I held through this entire move. But by building into the position from down here, adding in this area, moving risk to this low, then moving risk to this low, and then on an intraday level on this day, I was able to sell a lot higher than I probably would have if I gotten uncomfortable and sold into the panic on this day right here down into the 8s. It didn't go to 15 like I wanted it to, but by being patient for that, I was able to move risk up slowly and still walk away with over a 13, 14 to 1 R win. And because I stuck to my plan, it was still a massive success, even though in the moment it felt like a failure because I was cutting while the stock was fading. So I stick to predetermined price targets. I think that is probably controversial in the stock trading world. I think there's a lot of people out there who believe they think that they know more about price action and level 2 and tape than they do. I think a lot of us are actually more in the dark than we think we do. And stocks can do really funky things on the 1-minute chart. And the more that I can zoom out and just stick to this stock has to work, or I'm going to take my 1 hour loss, I think a lot of people would be a lot better off doing that. I think they'd grow a lot faster. I think they'd find consistency a lot faster. But yeah, that's how I think you should take a step towards maximizing winners. Having some bigger winners, I think, is really, really important when it comes to kind of yielding those exponential results that you'll often see on a trader's P&L curve. When you see them grinding for a while, they finally got the patterns understood. They finally started making, money more often than they lose it. Their winners are 2, 3 to 1. When you start to have those 10, 15, $20 winners sprinkled in there, that's when you start to see it go parabolic on the P&L curve. And most traders that I know that have figured it out and have gotten successful have found a way, every month or two to have those bigger winners. It's usually come down to them being prepared for it and knowing that this stock or this situation has the potential to be that for me. So leave some big winners in the comment section below. If you've had some big winners lately, whether it was Fannie Mae or CEP or something else in a completely different pattern, let us know how you go about having bigger winners on a month-to-month basis. Make sure to hit that thumbs up button, subscribe to the channel, and we will see you guys as always in the next video, but also every single day that the market is open, 8:45 a.m. for Good Morning Nasdaq. Have a wonderful, wonderful day, everybody.